In today's video, we'll look at the structural levels on gold, Tesla, Bitcoin, Total, and Solana. And please comment on cheat sheet charts you would like to see in future videos. In this video, we're going to look at the up and down CTKS structural levels across Bitcoin, Total, and 3 charts from the cheat sheet, covering crypto stocks, indices, forex, and commodities. There are so many benefits of analyzing CTKS structural levels. They give you the ultimate price action breakdown. You can predict markets like a professional. You can know where the price levels are before price moves. It reveals price structure secrets and gives you X-ray vision where smart money will buy and sell in the future. CTKS levels represent a price chart's strongest support and resistance levels. CTKS levels are created by applying Level 1 and Level 2 standard certification from CTKSmethod.org. In Valentine's news today, incredible news, I am back on X. So much gratitude to everybody who reached out and helped with support. And a very big thank you to the CTKS ambassadors. What an incredible group of people. And Benny Mortasia, 666. Benny, without question, is the superstar at getting rid of scammers. And Benny helped me out so much. Thank you, my friend. You are a legend. Benny's just amazing. He keeps X safe from scammers, and you can see I've subscribed to his service. Thanks so much to everyone. What an incredible Valentine's Day present, and happy Valentine's Day, everyone. Bitcoin, since the halving, has been going sideways until it took off around October, and now it's been consolidating. In past market cycles, for example, the 2012 cycle it took off, the 2020 cycle it took off, and the 2016 cycle it took off. It's currently just retracing, largely due to tariff wars. What's critical for us now are what are the structural support and resistance levels around Bitcoin, which is currently 95,924. In yesterday's video, the 2 key structural levels to watch were structural resistance at 98,384, and we saw quite a lot of structural selling at that level, and the structural support level at 96,493. Looking at Bitcoin's price momentum, a bullish case scenario if we get above that 96,493 structural resistance level, and especially getting across the 96,955, will create positive structural attraction to the 98,384 level, which is the one to watch out for this weekend. I'll be bringing you daily updates anyway, so just keep in mind this 98,384. A bearish case, if we lose the 96,493 structural resistance level, it's not guaranteed that we're going to lose it at the current time. Keep your eye on your cheat sheet. The cheat sheet is showing some really interesting behaviors at the current time. We've seen the VIX come down, the DXY come down, all sorts of good things, the yields decayed. That actually should place positive price momentum inside the crypto market for the next 24 hours. But always keep your eyes on the structural levels. That's where the truth is. For a bearish case, if we start to come down, getting below that 95,235 is your first warning sign. And that will put into play the 94,574 structural support level. We've got a couple of structural support levels underneath price, and they have been acting reasonably well in terms of just pulling in the buyers to defend these levels. If we continue to see that, even if there's negative price momentum, we would expect to consolidate around this level. Remember, you will get panics from time to time. This was the hotter than anticipated CPI print, which just pushes things down. Remember, these levels aren't brick walls, they're gravitational by nature. That means the price will wobble around them, so just get used to that. The key is to know where they are. That is Bitcoin. Let's have a look at Total. Financial literacy is wildly important. We're looking at a very unstable working environment, especially with AI and robotics coming in. You must be capable and able to grow your wealth independently from a job. Remember that no one is going to hand you your financial freedom. That's something that you need to build for yourself. When we look at total crypto market cap, what we saw, even though the CPI print came in way hotter than anticipated, the total crypto market was supported at that $3.05 trillion area. Then we came up to the 3.16, backed off, managed to get above it, and were stopped out at the $3.19 trillion area. The crypto market has been selling down. We had a structural failure right here at that 3.19, a secondary structural failure, a structural failure around the 3.16, underside retesting and coming back into this area of price momentum. It is a very important thing that we start to break to the upside to maintain bullish case momentum. If we break down to the lower case, we know that Bitcoin and total crypto market cap have structure, and that's worked previously. Remember, if you know when to lean in and lean out of trades, you can do incredibly well. Please let me know in the comments, where do you think the markets are headed to in the next 24 hours? Do you see bullish case momentum or bearish case momentum? Looking structurally is a complete game changer. When you look at price action like this without any knowledge of structure, it looks completely random, but it is not random. Let's just pop on structure, and you can see that when it comes to Solana, we're just currently 194 and 42 cents. We've come up from the structural support level at 189.29, and we've hit structural resistance at 195.10. If Bitcoin and crypto move up, Solana will also move up. If Bitcoin and total crypto market cap move down, we would expect to challenge that 189.29 level. It's wildly important to keep your eyes on the structural levels of Bitcoin and total crypto market cap. For a bullish price momentum, we may get a bit of a pullback, but then re-challenging that 195.10 and coming up to the 195.96, we may wobble around a little bit and confirm that as structural support before making our way up to the 199.07. You can see that level is fairly strong. A lot of retail think that whole numbers are where people are placing their orders. Only retail places orders on whole numbers. Professionals don't do that. For bearish price momentum, a couple of things that you can keep your eye on. Of course, we've come up to the structural resistance level at 195.10 and we're backing off. If we push up from here, that's a very good sign. That shows that there are a lot of buyers and a lot of buying momentum inside the market. What is more likely though is to come down to around that 193 level. So if you find the price is moving in a wave, just go with the wave. You just always keep in mind that if you're making a series of higher lows, that's good. You've actually got a positive trend line there. If they start to break, start to get weaker, it realistically depends on how fast and far it goes up in one hit. We know that there are a lot of rules inside financial markets and sharp angles reflect, but they deflect absolutely in an uptrend. So this is what you're looking at. If you get a bit of a downtrend to around that previous peak around the 193, that's pretty good. But if you start to see decays down to around that 192 level, that's not as positive. That starts to flip the favors for a bearish momentum. Keeping your eye on turning points as well as structural levels it's a really good idea. In a previous video, we looked at gold. Looking at gold like this is really difficult because you don't know where the statistically significant support and resistance levels are inside the price chart, and you really do need to know them. So let's just pop on the structure. Now, what we can see here, we've been defended at this 28.54 level for quite some time. Now, what does this mean? If we start to see negative price momentum, we have many safety nets underneath gold's price, especially down here at 28.54. Knowing where support and resistance levels are is wildly important. For example, we consolidated around that 28.54 level before making our way up to the 29.03 when we took off to the 29.39 and the 29.30 structural resistance levels. There were simply too many sellers there, and you can see that dotted green line. That is actually the estimate for the normalized positive price path for the month. We've met it in 11 days. The force is strong with this one. This actually means something pretty significant. We're seeing non-normalized price action. To hit a target so early in the month, we're seeing outperformance in gold. There's a lot of economic uncertainty at the current time. That's why so many countries are just hoarding their gold. Even so, there's a lot of panic in the market, but the structure will always hold. It's important and vitally important to know where this structure is. What you'll typically find when you have an explosive move up like this, it calls retail in, and retail goes all in and more just to get wiped out. This is why you must think structurally and not emotionally. For example, it would be pretty hard to think here as gold is taking off parabolically and hitting the structure at 29.39 that it's going to end up all the way back here at this structural support level. It might be a little bit hard for you to see. So what we can do is just reveal them like this. So you can see that there's a lot of structure inside gold. It's not simply that we've got structural safety nets here, we've got a lot of them. And when gold came down to around that 28.65 level, it bounced like a Super Bowl because this is called a GW or gravitational well. What is the standing factor in gold going higher? We would want to see more geopolitical instability. I think we're going to get our wish there. What about yields? If the yields come up, guess what gold is going to do? You betcha it's going to come down. And this was a major reason that gold actually descended during that period. It wasn't people taking profits. It was intercorrelation and interconnection between charts existing inside the cheat sheet. Or, as our beloved Purpuratum likes me to say, the Chi-Chi. Therefore, we must be always aware the price is always moving in a wave. It's always going up and coming down and moving up. Therefore, depending on what time you come into the market to trade gold or invest in gold or just to check it out, it could be going down or it could be going up. So just simple things like, oh, it's going to reach this target. Yeah, that's not really what you want. To be an institution of one, you need to know where the structural resistance levels are, the structural support levels are as well. Gold is very, very well supported. And what this shows you is that these structural levels are gravitational. They're magnetic. They are not brick walls, and they never were. When people first get into the CTKS method, they basically think, this is a brick wall, so it's going to hit there and it's going to do this. No, it doesn't work that way because all charts are intercorrelated and interconnected. For example, this was the CPI melt up, and it had a big impact on gold. We saw rising yields, and those rising yields and rising dollar squashed gold. This is why gold came down. A lot of people will tell you a lot of different stories, but the truth is in the charts if you're a good tracker and you know how to read them. That does take time, but it's so worthwhile. To create bullish price momentum, we need to get above 29.30 first and then above 29.39 to go higher. Bearish price momentum will be a loss of the 29.03. There's a lot of structure here, so even if we whip down, now why would we whip down? Increases in the US 2, the US 10 would be on the cards, a spike in the DXY. But if the euro dollar is spiking upwards and the Aussie dollar is spiking upwards, we would expect gold to spike upwards as well. If you think about it, keeping money in the bank, that's not going to grow your wealth. That'll maybe keep in contact with inflation, kind of neck and neck. But if you can trade, you can turn small percentages frequently and grow your accounts astronomically. Having a trading account and an investing account is something that every investor should do. Trading teaches you timing. It teaches you about structure. It teaches you about intercorrelation and interconnection. That's wildly important if you're an investor. If you're an investor and you don't understand the economic system, you're just hoping for things to go up. You're constantly mystified. Why did gold come up here and then why did it fall? If you're a trader, you're all about timing. And don't listen to people who say you can't time the market. Of course you can if you know what you're doing. But less than 1% of the trading population really knows how to time the markets effectively. It is a supernatural skill. Why is that? Because you have to look at intercorrelation and interconnection. You have to understand when you're looking at gold, you need to look at the yields, the 2, the 10. You need to look at the DXY, dollar yen, the euro dollar, the Aussie dollar. You need to look at so many things. What's the VIX doing? What's Bitcoin doing? Most people who trade gold will only look at gold's chart, and that is a huge problem because they simply won't know the drivers that move gold. So effectively, they'll think that moving averages and Fibonacci retracements and all of those things, that's why gold moves. It's not the case. It's always been intercorrelation, interconnection. And the deeper you get into it, the more you'll see it. And of course, the key one is always structure. Let's have a look at Tesla. Tesla is a component in row 4 of the cheat sheet, which is Apple, Tesla, Microsoft, and Nvidia. Inside row 5 is MicroStrategy, but it's just represented in this template, which comes from the profiting course. Let's have a look into Tesla's structure. The reason that we need to look at structure is because we need to know where the ceilings are and where the safety nets are. When we look across Tesla from the 8th to the current day, we can see around the 8th it just spiked up and then it's been decaying. It found a degree of support and then it's bounced. But why did it do these things? That is the critical question to answer, or to be capable of answering. So what we can see here from a structural perspective, Tesla had $373 worth of structural overhead resistance. There were a couple of more lines there. It just couldn't overcome this 373 level. When it couldn't overcome it, if you're not going above, you're going below. And this creates negative structural attraction at this time to the 339 level. If you've got a negative CTKS gap, you can overshoot the immediate level and go to deeper levels. I talk about this inside the profiting course, and there's scholarships available. So if you're interested, please directly message me on LinkedIn. And what do we see here? We came down, structurally overshot those levels, but were pulled back into this gravitational well. This is wildly important to understand. When you're investing in Tesla, if you can take advantage of these dips, that is the ultimate investment strategy. But to take advantage of them, you need to know where they are. For example, even though we had this big sell down when the CPI came out, it still had structural support at that 339 and the 333 level, and it shot up. For bullish case momentum, we're looking quite good as far as Tesla is concerned, but there is a structural resistance level at that 362, which we must overcome. You can see it played in there. So that 362 level is very important to overcome to get up to the 373. And then there's a lot of overhead structure here that we must grind through. So that means it could come up and start to consolidate. But this is a positive CTKS gap, so it could come up rather quickly. And a lot of people could get really overjoyed only to find out it doesn't go as they anticipate because it could consolidate in that area. What about the bearish case? If people are shorting Tesla, they expect it to just drop down. They may not be aware, as most people aren't aware, of structural support levels, so they might think it can drop really significantly and dramatically. If you don't know structure, basically what you look at is a chart like this and you just whack on a lot of different indicators, such as moving averages and Fibonacci retracements and etc., whatever you can find. But actually that's not going to solve your problem, because you need to know where smart money is going to say, it's time for you to leave the building and time for you to come back in and start to rock and roll. Very, very important stuff. So from a bearish price momentum, if people are shorting, they would seek to take out this 350 level, do an underside retest, and move through this 339. But just be aware, you're going to get a lot of whipsaw behavior here because these levels are strong. The buyers will come in at 333 and 339 and in between. Each day, we're going to go through the cheat sheet, covering off Bitcoin total and 3 more charts. Please let me know in the comments what charts would you like to see in future videos. The partial scholarships are open for the Profiting from CTKS Method structure course. It is an absolute game changer. When you understand how to read the cheat sheet, how to predict tops and bottoms, it will just change the game for you. If you can move away from retail trade perfection, which is the major reason people lose money, and just get rid of FOMO because you just need structure. You'll look across my shoulder as I go through trades in an incredibly difficult market condition. And then in week 4, it's all about making sure that you keep your money. Making it is one thing, keeping it is something entirely different. All you need to do is to reach out to me on LinkedIn. You can directly message me. And I'm so eternally grateful for everybody coming across to LinkedIn as well. You're just amazing people. Of course, I'll be on both sites, both LinkedIn and X as well. Rule 760 is a perfect one to just focus on for a minute. Start small and scale. When you know what you're doing, you can ramp up. But typically people go the opposite direction. They have no idea on earth what they're doing. They don't know structure, they don't know intercorrelation and interconnection. They don't know pretty much anything. They're just gambling. And when you gamble, there's a winner, but it's not you, it's the house. Here, we want you to be the winner. Therefore, starting small is the way to go. Learning is your superpower. When you get more and more confidence, you can just scale up then. There is no rush. This is a lifelong profession. You'll find that employment comes and goes, everything comes and goes, but the markets will always be there, no matter what. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.